Hello, this is Dr. Chris from HippoFriend. What is happening to the interest rates? Last year we saw this sudden increase in mortgage interest rates. We've gotten used to very low interest rates on mortgages, as low as 1%. This has a lot of people worried. So what's going to happen now? Well, let's first try to understand why these interest rates went up. Well, the basic driver was actually natural gas prices. Here in Europe we use 400 billion cubic meters in natural gas. And the price went up from 20 cents per cubic meter to a peak of 3.5 per cubic meter. That, for those who can calculate quickly, that is well over $1 trillion, and that is well over 10% of our entire consumption. So that is the main driver why inflation went up. Of course there are other reasons. Food prices went up, also because Ukraine is an important supplier of food. COVID-related bottlenecks increased prices further. The euro depreciated. Everything led to higher inflation. What happens when there's higher inflation? Well, we have a European Central Bank that targets inflation. It targets inflation at 2%. So if inflation is structurally above that 2%, they have to tighten monetary policy, and they do that by raising interest rates. And the market anticipates that, and then the interest rates go up. Now, what will happen? Well, let's first look at a very big long-term trend. In the end, interest rates is the price of the market of savings. How many people supply money? How many people need savings for their investment? And the global trend has been to a global surplus. And we've seen that for the last 20 years, and that has been driving down the interest rate. What is behind that surplus? Behind that surplus is aging populations, people growing older, getting worried about their old age. Then we see the Googles and the Facebooks, the big companies, they don't invest a lot. They actually also accumulate savings. Yeah? And that is the main driver towards lower interest rates. I don't see the trend changing fundamentally. What's happening right now? The big good news is that the price of natural gas on the wholesale market has already come down 80%. By now the price is only 70 cents per cubic meter. Not what you pay, but on the wholesale market. That is a main driver that reduces inflation, and we've already seen the inflation numbers over the last 2 months coming in every time below expectations. That should translate in more relaxed monetary policy, lower interest rates. Not so said the ECB. The ECB said in December, oops, we are going to tighten interest rates further. It shocked everyone. Interest rates that had started to come down shot back up. Well, I'm sorry ECB, you are a little behind the curve. The gas price peaked in September. Then to come out and make your diagnosis in December is rather late. Apologies to my ex-colleagues and to my ex-boss. I think you're behind the curve. So my prediction is that interest rates will again start to come down when inflation numbers come in further at lower levels. Of course, no one has a crystal ball regarding the interest rates. I base myself on decades of advising central banks, public debt managers. I would not tell this to you if I don't believe in this. This is Dr. Chris from HippoFriend. Good luck.